Hey, what's up? Thanks for coming back. This is my channel, Dapper Dividends, and this is the segment I call Stashing Worthy Acorns, where I put $50 into the Stash Worthy Bonds and Acorns app. I had $20 a month, and I share the results every week with you. But first, I want to say, give me your comments before you click away or the viewership goes down on this. Let me know what you like, what you don't like. Why did you click off? Why aren't you watching this? I want feedback. I want to know. I'm telling you, I'm giving you an order. I was a petty officer in the United States Navy. I was an MM3, so petty officer here is telling you to leave me comments and let me know what you think and what you think could be better. I would love that. As I said, I am a blue-collar investor. I have been working on commercial loading dock equipment in the Chicagoland area for almost 21 years now. I do welding, mechanical work, installations, service, heavy loading dock equipment, and I didn't know much about investing. I thought I did by just contributing to my IRA through the company, which there's so much more to it, and you can achieve financial freedom so much quicker. But I want work to be optional, and I want to have no debt. Those are the two things I'm working towards. But no debt is the first goal, and then work will be optional when I have enough passive income covering all my expenses for the entire year. And if you aren't sure how to be a dividend growth investor like I am, here's a wonderful book by my buddy on Twitter, Dividend Cultivator, called Too Much Money. It is $10 for just the book, but for everything that he offers, click on the link, see everything there is to offer. It's a money-back guarantee. $14. If you can't afford $14 to learn a lifelong skill, I don't know what to say. This is something that will pay for itself. You're literally buying a blueprint to teach you how to build a perpetual money machine. Like I have money coming in every single week from the best of the best companies. You can buy the blueprint, and in short time, it will pay for itself. You will get your money back. I don't know what more you can do to learn a skill that will pay for itself, guaranteed. And if you don't like the book, he will give you your money back and give you a refund. That being said, I am an affiliate. Click on the link below, and let's get to the portfolio. All right, so you can see I bought some Apple this week. Apple, after its crazy run up, it came down in price, and I actually got to buy a little bit more because it's been plummeting in price like I predicted on my charting video of the CCI. Showed it was weakening. So what do we got here? So I did buy Apple, and of course now it is back into the lead. So portfolio return so far is $46.26. The whole thing, the whole shebang right now is worth $221.26. Pretty cool, just adding $5 a week and starting with $50. And obviously the big winner so far is Apple, up 63% on Apple. So let's take a peek at Apple and see what's going on here. So right there, look at this. I'm almost getting close to a share. Well, the split helped me out a little bit. But as you can see, I've made 29. I've almost made $30 on Apple just since March. Now, it is a little bit skewed because I did start investing in March when things were just crumbling and collapsing. But all in all, kind of cool with the stock split. Check out my video from last week, what I showed stock splits can do, and just hanging on to at least one share through all the splits. Worthy Bonds, my Worthy Pure Capital one is at $51.21, so I've only made $1.21 of interest. I still have 5 bonds. I will not be able to get more than 5 bonds because they closed out their 50. Each one of these Worthy Pure Capitals was worth an offering of $50 million. This is Worthy Pure Capital 2. It's another $50 million. They ran out of the 50 mil from Worthy Pure Capital 1, so they had to start Worthy Pure Capital 2. So it's closed. You can't buy any more. I'm still not even earning a penny a day, but it adds up. It adds up, and you can see I'm already at over $1. Worthy Pure Capital 2, 161 of current interest. I own 14 bonds. I just had 2 more bonds go through, so that's bumped up. I have $192.82 and in interest, so I'm getting almost 2 cents a day on those 14 bonds. So that's going to start going a little bit quicker as well. All in all, love Worthy Bonds. Nothing wrong with it. Very good company. Very, very good customer service and outreach. Definitely recommend Worthy Bonds if you want to diversify away from the risk of the stock market. This still has risk, but it does not trade with the stock market. So when the market has wild swings, Worthy Bonds just keeps slowly and steadily climbing upwards. So this is our secondary account. I took $7,000 out of our emergency fund, which I have replenished, so don't worry if I lose this. It's not going to kill me. Wouldn't be nice, but I'm doing an experiment here for all y'all to check out. I do have 721 bonds. I've made $87.17 of interest. And if we click on the interest, click on daily, we can see that I am over $1 a day, $1.01. And look at that, every day I keep getting more because it's compounding. Fractionally it's compounding, but it is still compounding. That's still real money hitting the account each and every day. It's hitting my account 7 days a week. And it is worth $7,297. We're almost at $7,300, $7,200, $7,210 invested. And I did set up active recurring on the 14th of every month. They will just go ahead and start the process of buying myself 2 more bonds. Buying myself. It's a bit of an accent there. And that's Worthy Bonds in not a nutshell. It's Worthy Bonds in a green, blue, and orange egg. Acorn says, good afternoon, Russell. Good afternoon, Acorns. How are you today? Let's click and see. Let's show all the nice people out in YouTube land what is going on with this account. So it is worth $213.55. It is an aggressive portfolio. Have $5 a week automatically recurring, so I don't have to do anything. And we're going to take a peek at the performance here. Now, the all-time is a little skewed because, as I keep saying, I put in money in 2017. It was summer of 2017. August is there, so it was around July of 2017 I started putting money in, and I pulled that sucker out. And I pulled that money out in February of 18 because I wanted to get more of it into dividend stocks, which is what I am, a dividend growth investor. So let's just go to the 6 months here, and you'll see I put money in starting March 13th. It's just been up and to the right. It's been pretty nice up and to the right. Look at the 3-month window. Still good to go. So the total gain so far, I've made $21.72. Very cool. And I still, if you look at these are the aggressive, what Acorns deems to be aggressive investments. I don't have to do anything, but as I always say, I'm paying Acorns to pay Vanguard and BlackRock, the fund managers, of what shares they will pick for me to be invested in. So I'm kind of paying a middleman, and if I had to do it my way, I would just buy these outright and skip Acorns paying them money altogether. And I do have 1 share of the IXUS ETF. These are all ETFs, exchange traded funds. I'm not going to get into it. You can Google what is an exchange traded fund. But this is a nice portfolio breakdown to show you the percentage, what they're doing. Large company stocks are obviously the most invested in, and you can see what you own of those. And if you wanted to invest in them separately, this one is probably the best one I would do, the VOO. It is the Vanguard S&P 500 ETF. Tracks all 500 of the largest companies, and if you want to know what that is, you just click on the prospectus. You have all the PDFs here. You can go to the annual report, and this is pretty nice that they take you right to the prospectus reports. You can go through it yourself. It shows you the chairman, hello, everything you want to look at. I'm not going to sit here and read it because I assume that you are able to read. There you go. I got to the sector diversification here. Wanted to show you it is very tech heavy. The information technology is the heaviest of the VOO fund. And here's the statement of net assets. I'll just keep going with this. This shows you exactly what the market value and how many shares they hold in the fund. This is what you get exposure to when you buy the fund. They do pay dividends. You have exposure to all these companies. You can keep going on the list. So you buy 1 share of the VOO, you get exposure to every one of these companies. Cool, there's Procter & Gamble right there. We get dividends from Acorns Procter & Gamble and from Stash Procter & Gamble. That's double the dividends. And now the infamous bar chart that we've been building here. And for the first time in quite some time, look at this. Stash was at 221.32 last week. This week, 221.26. So it has dropped a few pennies. Same with Acorns, 213.13, 213.55. Actually, Acorns has grown up just a little bit. But there's the Worthy Bonds up and to the right, up and to the right. So they've all been up. And for the first time in, again, quite some time, the Stash has not precipitously grown, and it has actually dropped just a hair. So that's where the bar chart's at. Thank you. Well, if you think I provided you value and you really like that, I just ask that you subscribe. I ask that you give me a thumbs up. As I said, I'm trying to grow this channel. I want to share wisdom and knowledge every week, and I'm trying to show you how simple it is to invest and start getting passive income coming into you every week. So like and subscribe. Follow me on Twitter at RustyRam78. I'm always on Twitter trying to share knowledge and just spread wealth and knowledge. Spread a wealth of knowledge actually is what I'm trying to do. And with like-minded people, that is the best thing you can do, is try to control the source of your income. And now my disclaimer, I am not a licensed financial advisor. This is not financial advice. Please do your own due diligence. Actually, a side note on that, you must do what is right for you. Don't put money into something because somebody tells you that it's a good thing to put money into if you don't know anything about it. That's the worst thing you can do, hands down. Don't buy a story. A lot of companies and people will tell you stories about a stock, but if that company, two things I like to do is I like that company to be generating cash flow and growing their earnings. If a company does not make money, I'm not interested in investing unless I'm speculating. If a company doesn't make money, you are speculating that one day they will. I don't care what company it is. I don't care what they say that they're projected to make. Until you have on the balance sheet that they are making money, I wouldn't put money into it unless you are speculating. And when you're speculating, you're not investing, and there's a good chance you'll lose all your money. So only speculate with money that you are comfortable losing 100% of that money. All right, that's enough said. Check out my videos. I'll be back here next week. I'm not going anywhere, but I really want to know what you think, and give me your opinions. I have a thick skin. I've been around a long time. I can take it. Let me know, and I will talk to you next week.